September is the most dangerous month for markets. Many of the crises, collapses and adjustments of the 21st century have come in this month. And judging by the recent deals of investment whales, the Big Short Part 2 may well happen in the coming months. Nothing shows the mood of top investors more accurately than the trades in their portfolios. This is where Form 13F can help us. And let's start with the legendary Warren Buffett. His $350 billion portfolio, which contains nearly 50 positions, has undergone very little change. None of last quarter's investments reached even 1% of the portfolio. For comparison, we can see Berkshire Hathaway's more aggressive acquisitions in recent past. The latest changes to the portfolio show a bet on the construction sector. The real estate market had a tough time in 2022 amid rising rates. But this year, the situation has been more favorable for developers, and their stocks are growing back. Buffett is betting on this trend to continue. The Omaha-based Oracle bought shares of 3 real estate developers at once: D.R. Horton, which is the largest home builder in the States, as well as NVR and Lennar. As for the big sales, after all the difficulties Microsoft had in getting approval to buy Activision Blizzard, Buffett seems to have decided to cut the risk and get rid of 70% of that major video game maker's stock. In total, Berkshire Hathaway sold more shares than it bought during the last quarter. The difference between sales and purchases was about $8 billion. It seems that Buffett's team has taken a wait-and-see approach in order to use their huge cash reserves on possible future stock market crashes. The world's largest hedge fund, Bridgewater Associates, which holds a $16 billion portfolio of nearly 800 different stocks under management, has been more active in previous months. Dalio's portfolio updates show a strategic shift in investment with a significant withdrawal from the gold ETF and a significant reduction in Meta stocks. Meanwhile, Bridgewater increased its stake in BlackRock's S&P 500 ETF. The S&P 500 has already surprised many this year. An increasing position in this ETF by 10% indicates that Dalio continues to believe in the strength of the US market and the growth of the index. And of course, the Steve Jobs of investing hasn't forgotten about the Chinese market, which he's been betting on for the past few years. Old Ray increased his position in shares of e-commerce platform Pinduoduo by almost a third during the quarter. Despite the purchases, Ray Dalio is rather bearish. Of the top 25 positions in this portfolio, only 10 were increased, while the remaining 15 were reduced. Like this video and subscribe to the channel before we move on to the more risk-tolerant investors. Cathie Wood's fund, you could say, follows the opposite to Warren Buffett's approach in investing. The company manages a $15 billion portfolio of more than 200 different stocks. ARK Invest, which recently predicted a 10 times growth of Tesla's share price over the next few years, unexpectedly sold off a significant part of Musk's company shares after the recent rally. These sales also affected another top tech company, Roku. Moreover, in early August, the Cathie's fund reduced their share in its portfolio even more significantly, selling off their shares worth $30 million. By the way, ARK Invest has high hopes for this company. Shopify and Exact Sciences suffered even more significant reductions in their positions. In the first half of the year, ARK Invest was remembered for its significant investments in Coinbase, but in July they suddenly sold them off by $50 million amid the local crypto industry rally. Consequently, many are voicing concerns about the prospects for Bitcoin and the crypto market in the final quarter of this year. These sales reflect the company's strategy to diversify their assets. They are not afraid to lock in profits and reinvest into new companies. Cathie Wood's fund is known for its active investment approach, often making significant changes to the portfolio. However, ARK Invest's mood, like previous top investors, is closer to bearish. Less than 10 of the top 25 positions in the portfolio were increased. According to the activities of the 3 mentioned funds, we can say that they are not expecting a bull run in the near future, but rather the opposite. They are waiting for some kind of collapse to get large positions at lower prices. However, they are still a long way off from Michael Burry's bearish attitude. The legendary investor who predicted the 2008 housing market collapse makes a big short bet against the stock market for $1.6 billion. Now, as much as 93% of Michael Burry's portfolio is currently short market indexes. The last time time the Big Short made such a large bet was in the same year of 2008. Whether the market is waiting for the Big Short Part 2 or this news was used to manipulate investor sentiment. We analyzed it in a different video. Click like, subscribe, and see you in new videos.